Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a channel failure here on crude oil. So we just actually got triggered in. Let me place my stop really quick here. So we just want our buy stop above this candle here, 4 contracts, and we're looking for our profit target basically to the downside. Because we waited for an extra candle of confirmation, we're just going to use the candle that we used to get in as our final profit target. So 104.47 is going to be the profit target down here, and we'll change that to 4 contracts, and this is going to be just basically an all-in, all-out kind of trade here. Again, just because we waited for a little bit more confirmation. But looking at the trade itself, the reason why we're interested in this trade is you can see here we had this channel start forming here earlier this morning, and we were moving to the upside, and we kind of moved up and pushed up and had new higher highs, higher lows, all the basic stuff. But then we kind of blew out the top side of this upward channel, and when that happens, a lot of times you're going to expect the same thing on the opposite side where you have a little bit of a breakdown. It's usually a big heads up that you're going to start seeing some failure in that channel. So when we came back down to the channel lows, we did blow out just like we were thinking, but we never actually came back up in to the channel like you would normally see a channel hold. With a little bit of a blow off like this, again, you'd expect it to the downside about the same size, which is fine, but then you would usually see a subsequent following move higher. But what happened instead was we started breaking down, we broke down again, and now we started actually cracking new lower lows and beginning to form a new higher, a lower high. So looking at that in just the context of the wedge itself, or the channel itself, we actually came back to test that channel low and then immediately rejected back down with this big bearish candle right here. So we had a lot of sentiment to the downside coming into this market that is really just giving us a huge heads up that, hey, you know, something's not right to the upside. We should be seeing another push back down to the low side just to see where the market wants to start going. We probed to the upside with this big wick on the top, and you can see just based on the wick itself, they failed up there. That price was rejected out of there, and we're falling back to the low side. And because of that, we should be revisiting these lows and probably have another probe to the downside. So we're just getting out a little bit more conservative ahead of those lows, but in reality, that's kind of where we're looking to get targeting in here. So as we continue to fall down here, because this is a little bit more of an aggressive trade, waiting for an extra couple candles of confirmation, we're going to trail our stop down with this trade and just lock out as much as possible on our way down to our profit target. So just like every other price action trade, these can take a little bit of time, but right now we've got our entry at 104.61, profit target, all 4 contracts. There it goes again, not letting me do it here. Change my snap mode. All 4 contracts sitting at 14 ticks with a stop which should be 15 because it's 1 extra tick past that candle high there. So pretty much a 1-to-1 risk reward on this trade. And again, we're going to try to lock in as much as possible on the way down, but it probably will take a little bit of time. It's pretty typical for, you know, price action trades in general. So we'll come back in a little bit and we'll see how we end up on the day. All right, we're back and actually just got tagged at our target there. I did move my stop down. Again, we knew that we were going to be trailing our targets down along with this, and we were filled on that way back down there, and pretty much just worked out exactly like we thought it was going to. Now, we might continue a little bit lower. It wouldn't be a surprise just because we're expecting price to want to probe underneath this low to see if price actually wants to stay underneath that area. But if it doesn't, then you would expect it just to cycle right back around and move back up to the upside and try it again at the highs and see where it wants to go. But if we can manage to stay below these lows after a probe, then we should start seeing a little bit more of a fall lower here. But in this case, you know, we got out at our target here, 104.47, got all 4 contracts filled down there, which gives us a total profit, 14 ticks on each one. So you can do just 14 times 4 for 56 ticks on the trade, $560 in a pretty quick move. You know, it worked out just kind of like how we thought it would, allowing us to ratchet down our risk so that after the trade had already started going, we were only risking 5 ticks per contract. So that basically, after letting the trade play out for a little while, it reduced our risk to reward, you know, quite a bit, where we were only risking 5 to make 14 per contract. So really good area to be in, and an overall really good trade. So that's going to be the trade for today. If you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at schooloftrade.com. Have a good one. Bye.